Should we kick off, Rowland?
Absolutely.
Thanks very much. Well, thank you everyone, and welcome to the latest instalment in our series of discussions looking at different aspects of communications in tough environments at Sefiani. I'm Nick Owens, I'm a director at Sefiani, and I head up financial communications and investor relations as part of what we do. And today we're going to have a look at the question of how best to communicate with investors during the pandemic and beyond. Because whatever else it's done, COVID-19 has certainly devastated economies worldwide, as we know, and that means volatile capital investment markets. Investors obviously want to know what's going on, and they want to hear directly from the managers of their money. But with large group meetings almost impossible and so many people working from home, how do you do that? Well, according to our guest today, COVID might actually be accelerating or simply accelerating a structural trend that's been in place for a while, and it might become the new normal. I've got with me Rowland Hirst, who's a founder of Forum 360, a virtual meeting platform purpose-built for investing engagement. Prior to setting up Forum 360 a few years ago, Rowley had a long career in investment advisory, working with fund managers and institutions in Australia and the United States. For our audience, the Zoom Q&A function will be open throughout, so feel free to post your questions at any stage and we'll do our best to get to them. If we run out of time today, then we'll look to answer those offline. So Rowley, first of all, thanks for joining us today. Perhaps if you could start by describing your own background in investment and what led you to start Forum 360.
Thanks for having me, Nick, and look, thank you for your audience for joining. I just re-emphasise Nick's point that this is your meeting and I'm here to answer your questions throughout, so please send those questions in. Nick, I'm been a veteran of financial services for over 20 years, working, as you said, working here in the US and in Canada as well. A large part of my roles in the past has been in investor relations, in a role where I would take large listed companies or listed companies around to meet with their institutional investors in the US and Canada. What got me onto the idea was January 2013. I was sitting down writing a bit of feedback back to a company that I just hosted on a roadshow in the front page of the Wall Street Journal. I was in New York at the time. It was an article by Bill Gates on the importance of measurement. Now, Bill was talking about it in relation to social sciences and improving outcomes in the treatment of disease. But it really got me thinking that actually there's not enough focus on measurement in financial services, particularly when it comes to investor relations and particularly as it comes to engaging stakeholders and your investors. So that's what really got me interested in the idea way back in 2013.
So was there a sort of pet hate you had throughout that time that led you specifically to set up Forum 360, or just the accumulation of your experience and observing interactions between investors and money managers over time?
Yeah, look, a bit of both there, Nick. Accumulation of sort of certain little pet hates, I guess. And the thing that bothered me about the experience in the US and Canada, and particularly taking Australian companies to me, is that management teams would devote a lot of time away from managing their company to go and visit investors. They hop on aeroplanes, they fly a long way, and then in markets like the US and Canada, it's not like Australia or the UK where you've got 2 or 3 money centres. Over there, you've got 30 money centres, and arguably in these other countries now, as we move into the new world, that definition of money centres expands a lot wider. But my pet hate was devoting so much time to travel for meetings that were largely hit and miss. In terms of, well, not sorry, I shouldn't say largely hit and miss. Often you have hit and miss meetings as to whether they were worthwhile. The measurement of how well you went in the meeting was largely based on subjective feedback handled by other parties, and really the relationships were hard to build and hard to maintain if you're just visiting investors once every 2 years. So from the investor side of things, there was often this distance that was inhibiting an investment decision on whether to invest in a company, because I just didn't feel like they were building relationships with companies through as the the meetings were too infrequent, and certainly that's what got me thinking about Forum 360 as well.
Okay, and so how does Forum 360 address all of those deficiencies? And I know you can't name names because I think yours is at least partly a white label service, but are you able to tell me the sorts of institutions or organisations that are using Forum 360 at the moment?
Yeah, so my experiences with in the past has been with listed companies, but we find that the role of investor relations is very similar whether you're representing an active management team where the asset is a company, or an active management team where the assets are funds and the people investing. It's similar roles. And so we're working in 6 jurisdictions: Australia, US, UK, Canada, Singapore, Hong Kong, with fund managers who have institutional mandates through to retail mandates. So meetings of 10 people coming to it through to meetings of 500. We're working with an exchange and we're working with companies, not just listed companies, but also private equity. And that's because good communication isn't just in the field of listed companies. It's also, if you've got more than 10 shareholders in private equity, and you want to keep in contact with them frequently, then our model is a great fit for that as well.
So in your experience then, what do investors want to hear from the people who are managing their money, and what really, how are they not really getting that at the moment through traditional communication models? Because things like webinars and video conferencing are common, but it sounds like you're saying asset managers and companies need to go above and beyond that. It's something a bit more like a fireside chat with investors, from what I can gather.
Yeah, let's sort of break that question up into a few areas. So traditional models are largely broadcast models, and the view we've taken is that market releases and investment letters were out of date before COVID-19, and certainly in the new world, they will be further behind the curve. So those broadcast models were out of date prior. Webinars are a lot like taken from the seminar, and so that idea of presenting to an audience and perhaps taking their questions at the end. So
that's not enough, you don't think?
Sorry?
Anymore. That's not good enough anymore, you don't think?
No, because the domain has changed. I think it's if you keep that format, it's good for a hotel room where you've got 400 or 500 people who are coming maybe having something to eat, and you've got different speakers up on stage, and perhaps they can ask the question at the end. But in the new world, you're going to someone's mobile phone, and to have them join you for 30 to 45 minutes before you get to what they want to talk about is problematic. And we think the opportunity with virtual meetings, and we focus on group virtual meetings, which are more scalable than video conferencing, and more inclusive than webinars. It's like a meet the manager style event.
Yeah.
For managers, group investor meetings for investors. So it's inclusiveness. And the idea, and so the point here is that why these meetings work better than the webinar, for example, is because people feel like it's their meeting where it's the agenda is set by your stakeholders, and then you build your meeting around what they want to talk about, and that way you're making far more efficient use of your time and your investors' time. And particularly if you can get to Q&A where the agenda has largely been set ahead of the meeting, which you can do in the virtual world, then it looks like Q&A from the start. And so it does two things for investors who are coming to a meeting. One, their question might be next, so they're more engaged. And then secondly, because they've set the agenda, you've had time to prepare for that, and you're answering your questions at your peak. You're answering them well. So that's what an inclusive experience looks like. Forum 360 goes beyond that as well, because in that we give the participants the opportunity to invest while they're at the meeting, not through us. We're not in the business of financial advice, but we put up the pathways that the fund manager wants to set for those investors and for listed companies as well. Clearly the ability to provide feedback while you're there, and if it's to retail investors, they can go and seek advice from their financial advisor while they're in the meeting as well.
Yeah, so it sounds like you're shifting the dynamic somewhat, and in the spirit of what you're saying about meetings being more inclusive and I guess instantaneous in terms of feedback from participants. If anyone's got any questions, they can send those through as we speak, and we'll try and get to them in real time. But just going back to the first part of that question, I said, and what do investors or what are investors wanting to hear from the money managers? Then, what sort of questions are they finding coming through typically?
Yeah, so look, the best way to answer that is now they have the ability to set the agenda and have access to their management teams and put those questions on the agenda, and then have those meetings built around it. And from an ESG perspective as well, showing good governance and being accessible to stakeholders is on most company websites these days.
Yes.
And not only that, for active fund managers, if you go to their strategy, they talk about an ESG strategy. This is a great way to show your advocacy for the strategy that you pursue as an active manager and as a listed company to reflect what your policy states on your website.
Yeah, so in better, here's what you're saying is that more inclusive and more kind of direct investor kind of communication and feedback is part of living the governance part of an ESG sort of strategy. Is the quarterly investor newsletter or shareholder update dead then, or at least it's a much smaller part of what money managers are going to be using going ahead?
Oh, Nick, I think we'll see that for some time. That fact sheets, investment letters will continue to be released, market releases will be put to the exchange. There's a regulatory requirement there. I just think that they will modernise, and the way that they'll modernise is that there will be the news or the result or the update with the offer of a meeting and the opportunity for investors to follow up on that release and meet with the managers of their money or advisors representing those investors meeting with the managers of their money. And largely by just making yourself accessible on a regular basis, even if people aren't coming to your meeting, the fact that they know that you're accessible builds your reputation in terms of a solid investor relations effort and having access to and ultimately adding to the score on the quality of management.
Yeah, so look, it seems to be it's all about trust. It seems, and we hear a lot about trust in stakeholder management today. It's more than just a fad, obviously. I mean, we know that companies whose CEOs are visible and who share something of their own philosophy and even their personality in communication with shareholders are generally trusted by their stakeholders. You're big on the idea that the trust is now central to investor relations, and sometimes even more so than performance, it seems. I've seen research you've highlighted showing that asset managers who focus on building trust through investor communications and engagement, generate 4 times as much in funds under management as companies that are the best, that show the best performance in asset management. I mean, that's quite a big differential, isn't it? And how do you account for that?
Yeah, so as research done by Chestnut Advisory Group in the US back in 2014, a survey of asset flows among institutional managers. And they found that managers with strong investor relations programs and focused on building trust with their stakeholder, with their investors, raised up to 4 times as much money as those who were putting up the numbers, the best performers. Look, that's it's putting a number, I think, on anecdotes that many of your contacts, many of you would be aware of and see in the anecdotes, not just in the US, but here in Australia as well. And it's not just active managers. Towers Watson research back in 2009 found that companies who are great communicators outperform companies who are poor communicators by up to 47%. And so, again, there is significant value to management teams and how they convey their strategy. The traditional methods of measuring that value are now in, with the move to virtual meetings, we are now in the realm where those that measurement is vastly improved.
Because I'm sure at some point performance does matter, but it's not just marketing style over substance. Then I mean conceivably, the sharpest sort of money managers are also kind of ahead of the game in terms of their investor engagement. So it's not just style over substance, you don't think?
No, look, I think the Chestnut Advisory research showed that it's communicating your strategy clearly, concisely, and frequently. And the story that I tell about successful communicating companies that I've seen in my experience are those who follow a pretty simple path in how they communicate their strategy. You know, we met 6 months ago, or this is what we told the market 6 months ago. We now hold ourselves accountable to what we said 6 months ago. This is what we've done. This is the outlook for business now and what we're seeing in our business now, and we'll take your questions on that, of course. And then this is what we expect to see over the next 6 months by the time that we meet next time. And just consistently running that method of engagement, I think, is a great way for building trust.
And so when you started Forum 360 a few years ago, you couldn't have foreseen COVID-19, right? But it strikes me that if fund managers, listed company CEOs, and financial advisors were looking for a way to engage with investors in an environment like this, when you can't do face-to-face meetings or group meetings, this would fit the bill. Is that how it sort of panned out for you? Have you seen a surge in interest during COVID-19?
Yeah, I think that, yes, we have. The important thing to stress there, though, Nick, is that we're living through structural change. And what do I mean by that? Is that everyone from your smallest investor through the chairman of the board now knows all about virtual meetings. Many of them are on virtual meetings every day. And so the structural change, how that looks in the new world, is that if you're basing your relationship on broadcast methods, where we claim that as an active manager of a fund or a company that value prop is my discipline as a portfolio manager or as a CEO, my very smart team of analysts, and unlike passive investment where we have a relationship with you, we're here for you. But the traditional means of showing that to a large part of the shareholder base has been, oh, here's your market release, or here's your investment letter, here's your fact sheet. In the new world, that market base have structurally shifted to be all very familiar with virtual meetings. And so those who lead with the accessibility via a meeting will be meeting those minimum expectations, which have structurally changed from what they were pre-COVID.
There's a questions coming through, Rolly. I don't know if you're ready to answer it now. One of the features of the Financial Services Royal Commission was a lack of trust in financial advisors and others. I mean, how can better engagement play a role in rebuilding that trust? Well, certainly we've seen many participants in the financial services space fall short of what people expect, and that's come out of that process. I guess it's part of it's about transparency, isn't it?
Yeah, I think one thing that Forum 360 focuses on in disrupting is the relay method of sales. We think it should be more of a collaborative effort between whether it be the fund manager or the fund distribution team or investor relations, and similar for companies. The issues in the past has been that when I talked about the value, how we pitch the value proposition of the fund, it's been my discipline as a peer portfolio manager, my smart team of analysts, and we're here for you. I was at a conference where this clicked for me back in 2018 in Chicago, where I was in a room with 600 financial advisors, and we were listening to a well-known portfolio manager in the US who was basically saying this message. And then it was followed with, and now it's over to you to go and sell that to your clients. That were not the exact words. I am absolutely paraphrasing all this, but that was the message. And now it's over to you to tell your clients. And what we see in the new world is that actually that message changes to, and now we are here for your clients, or now we're here for you as representing your clients, so that your client doesn't feel like you're just reading off the letter in communication with us. So it's improving that network of the relationships that you have as an investor, so that you feel like I've got a relationship with my financial advisor. A financial advisor has recommended an investment product for me, and I now feel like I have a relationship with the manager of that investment product, either directly or through my advisor, depending on my preference and the regulatory hurdle. So that's the focus, and in fact, actually, the vision of Forum 360 is that we believe that the future of financial services is a series of direct relationships, and part of that stems from your question about the Royal Commission. We think that that is an outcome of the Royal Commission, and quite frankly, the Royal Commission was not just Australia-centric. Sorry, take that back. It's not just a discussion that went on in Australia.
Those issues are global, yeah, I'm sure. Yeah.
Singapore, Hong Kong, Singapore, Canada, the US, UK, actually before Australia. So this is not unique to Australia. That's the point I was trying to make.
Yeah, so there's another question here, but I wanted to, I'm keen to touch on something else before we get to that. You're not licensed to give financial advice, and I'm not necessarily looking for that, but you were working in the US at the time of the GFC, which was a momentous event, probably something that we, one of the bigger events we've seen in financial markets in our lifetimes. And I'm not sure that we'd all even fully recovered from that when COVID hit. I'm interested in what parallels you see between the investment environment now and after the GFC. COVID is an altogether different type of crisis, I think. I mean, but do you think the impact on capital markets and investment will be worse than what we saw after the GFC?
Yeah, look, they're two very different experiences. The financial crisis was a crisis of confidence across capital markets, from equity all the way through to senior debt of companies. This is a virus which is stifling economic activity. So I mean, that's a key difference. We may well see periods of high market volatility as we try to recover from this, during which we might have confidence issues in capital markets. But
so there's money still. I'm sorry to interrupt, but there's money still floating around in the economy now. It just can't be deployed. Unlike the GFC when there was a credit crunch. Is that right?
Yeah, and look, the other thing I think is important to note here is that remember the word austerity was bandied around as we tried to recover.
Yes.
We haven't heard that yet. I stress yet, because the pathway out of this is that we eventually find a vaccine, and that we try to regain the GDP that we've lost. And maybe that happens before we have the vaccine. I don't know, but that pathway to recovery isn't necessarily smooth, and we've got huge debt burdens that we'll have to deal with down the track.
Yeah, sure.
You did ask about the parallel, and certainly I'll take you back to that time when I was in Chicago with a bunch of financial advisors. I asked this very question about their experience during the financial crisis, and they made a lot of relationships that will be with them for life during that time by being there for their customers and actually really showing, going above and beyond to ensure that the well-being, financial well-being of their customers. And so we're in what the parallels are is that we are in a period of uncertainty. And in this period of uncertainty, these are where relationships are made and lost more frequently than periods of low market volatility.
Yeah, I'll go now to a question that has come through that touches on some of that. Given the uncertainty caused by the COVID virus, do you think that shareholders are still expecting short-term outcomes, or are they more likely to show some patience now and take a longer-term view, which is what CEOs might need to implement longer-term strategies, which might be a good thing for the companies?
Yeah, look, I think that if we come back to the point of ESG, and traditionally before COVID, the E was the biggest part of ESG concerns for typical ESG fund managers. But I think that's shifting to governance and very much how you're treating your people, how you're treating your community, how you're treating your customers, your suppliers, and so investors will want to see more information from the CEOs on this and absolute transparency during these periods. And then if you're not delivering on that and you shock the market, then I think the market will likely deal with you savagely for the G and not fulfilling the G.
Yeah, which is kind of tough at the moment for CEOs because some of them just don't have any visibility. I mean, just about all of them withdrew. If we're talking about listed companies, most of them withdrew guidance that was in the market. You know, once the virus hit, and you know, I mean, it's not there's not a clear pathway out. That doesn't mean they can't still communicate what they do know to investors. You're saying, look, an important part of your model is the analytics around investor engagement and the feedback the feedback loop you offer that goes back to whoever's being hosted on the platform. I'm kind of interested in what buttons money managers can press, even if it's sort of unwitting, that really annoy or please their investors. What sort of feedback typically are you passing on to people who participate on your platform, and how are they adapting to it once they get it?
Yeah, so I think this is not just in Forum 360, what we're seeing broadly for people who are using, and look, I want to get more on the analytic differential that we bring to the market. But I think what we're seeing across the space is that if you treat your virtual meeting like a webcast is just, there's no question, right? But a webinar, like you're getting up behind a lectern in front of a room and you're going to chat to them for 40 minutes and maybe take a question at the end or two. What assurance do your investors have that their question is going to be asked? And so if you're not answering their question in the meeting, then and they don't have that assurance, then they're not going to prepare. And that's what we're finding is that companies who think that they're just going to run through the presentation for 30 to 40 minutes and then maybe take some questions are not attracting the preparation that they would want from investors at the meeting. And likewise, the investor comes to the meeting and doesn't feel like it's a great experience because they're coming to the meeting from their mobile phone or from their desktop, and they've got to sit through a presentation for 30 or 40 minutes and then maybe or maybe not have their question answered. And so the buttons that are pushed that work really well is when you hand the agenda to your investors ahead of that meeting, and you allow them to guide you on what they want to discuss. Now, Forum 360's tech enables the companies to really focus on getting to what investors want to talk about within the first 5 to 10 minutes of the meeting.
Right. Okay.
And that is our aim with our meetings, so inclusive experiences. But you know, elsewhere you don't have that opportunity, but certainly the aim is not changed. You're still trying to get to what your investors want to talk about early. So inclusive meetings where I've had a chance to set the agenda ahead of the meeting. I come to the meeting and wow, it looks like we're straight in the Q&A, and even though a lot of those Qs have been asked ahead of the meeting, then that to me is I'm more likely to prepare for that meeting for my follow-up question. And also for the company, they don't feel like they've just run off a deck for half an hour and then not get much out of it.
So they can't say they weren't warned then when they go into a Forum 360 meeting. Have you noticed the nature of the feedback or the feedback loop changing through COVID? Like is are investors looking for different types of information?
Look, we're all in this together nature so far means that when you have these inclusive experiences like you do through Forum 360, that investors are grateful for this structure of meeting. And certainly those who are accessing having that kind of access, that sort of structural changes, they may not have had that access before under the traditional broadcast models. They may not have seen it before, but now they can. And so I think there's a real drive towards the benefit of virtual meetings, and we might get onto it a bit later, but there's some interesting research out of the US on how we're adapting to virtual meetings, which works very well for the group virtual meeting that we're focused on.
Well, what is that research showing then?
So it was released late July. National Bureau of Economic Research surveyed 3 million employees prior to COVID and post-COVID, and how they are adapting to virtual meetings. And what they found is that and that's really, it's the first key research with a lot of breadth that focuses on what adaptation looks like. And so what they found is that employees are looking for shorter meetings. So let's get to the point about what we want to talk about. They want more people at the meeting, and you've probably read lots of stories about fatigue or experienced it yourself, about video conference fatigue. So
Sure.
It's a group meeting that works well for get your meetings into groups. Get to the point, and then more frequently. And so this gets away from I think what we've seen, particularly from intermediaries and some marketing teams, and that they've tried to replace the traditional showpiece event with the virtual equivalent, and tried to make it run like it would if we were in a hotel room. And to me, that
Yes.
last bit of we want more frequent meetings really says that investors, employees and investors want to move away from that showpiece event model to something that's more intimate, inclusive, and more frequent. And that's the last part of the research they found.
Right. Yeah. Okay. That's very interesting. So for any of our audience who are investing, and I'm sure a lot of them are, and based on what you're seeing, what sort of engagement should they be expecting at a minimum from their money managers, whether that's a financial advisor or a listed company they've invested in, or a fund, a portfolio manager they've put their money with? I mean, is there? It sounds as though you're saying that the minimum expectations should have increased or have changed, in recent times.
Yeah, look, I think we've got to try and look. I'm not saying they're not doing it. I mean, fund managers have moved broadcasting tools to digital. They're doing short educational pieces on for their investors, and they're doing webinars, and gradually they're trending this way towards more inclusive experiences. I think the point I'm trying to make there is that we should use this opportunity in shifting in the structural change we've seen, vertical adaptation, to realise that these experiences are far more data rich than their physical equivalent.
Yeah.
But the way that and so the objective with these experiences is to capture that information to help measure how well you're engaging your stakeholders, and that gets back to that research of how important that is with the analytics that we focus on, and particularly that's our focus at Forum 360 on analytics. So I'm not sure if I'm answering your question.
Well, hopefully it's a virtuous feedback loop, but on the flip side, then, if a sort of a fund manager or an advisor is not communicating with you that well, or not giving you what you want, is that that might suggest that then perhaps not evolving with the market? I mean, is that a red flag for an investor then, or a client of a financial advisor?
Oh yeah, absolutely. I think that if the management team's not transparent about and not making themselves accessible, then you've got to think, how successful are they at conveying their strategy to potential investors, or as a management team of a listed company, how successful are they at conveying their strategy to the broader market, not just yourself. Management quality is a key decision criteria amongst most active institutional investors, and makes up a significant chunk of their decision criteria. And so lack of access means lack of transparency, which means higher risk of a shock to the market.
Mm. There's another question here which we might get to, Robbie. As investors are looking for companies who adhere to higher corporate social responsibility standards, I mean, what impact has COVID-19 had on those standards, and how do you communicate that to stakeholders?
Yeah, so that's part of the structural shift as well. Is at the board level, we've had to think about, in the early days, we had to rethink our business continuity plans for our employees. Yep. We traditionally dealt with, particularly after September 11, offices that were out of action, and how we moved our employees to a different location. We weren't really thinking about how we have to move all of our employees out of the office into their home. So a lot of that was the thought process in the early days, and I think a lot of the message now that's coming from companies is that that's where they were spending a lot of their time, and the focus on the well-being of their employees. And that's important, because I think pre-COVID there was a big shift in the corporate, in what the role of the corporate was, or what the role of the corporate is. You might be familiar with the Business Roundtable in the US.
Yeah.
Yep. It is the representative body of corporate America. And last August they changed the role of a company, and to one where it wasn't primarily focused on a long-term shareholder value, that it was focused on delivering for its customers, suppliers, community, environment, shareholders, and staff as well. So with ESG, that's ESG at work, and in changing that responsibility. And certainly the weight of money that's in ESG strategies, Forbes estimated it back in 2018 had been at least a quarter of the managed asset pool in the world.
Yeah, look. Yeah, sorry, no, it strikes me on some issues like, and I guess climate change comes to mind, that where companies and investors are ahead of government really on so many fronts, and there are other issues as well. We've seen what happens when companies get it wrong with Rio Tinto, and the issues in WA on the gorge on Indigenous land. No question about the importance of that now, and I think it's just like a given. Like it's not optional really anymore. So we'll draw to a close fairly soon, Rolly, but before you do go, just a couple of final questions. I mean, the markets at the moment do appear to be holding up. Is that just misplaced optimism, or should we expect more pain to come? Again, I know you're not a financial advisor, but I'd be interested in your thoughts on that.
Yeah, so thanks for making that notification. I don't give anyone advice. And I think the important point I'd make here is that it took real GDP in the US 2 years to recover to where it was before their recession. And that's 2 years post December 2009, post their recession. So I don't think you can expect really GDP to recover for once we hit the end of the recession for that amount of time, potentially longer. How long it takes, I think there's still so many unknowns as to the recovery time. I think this time around, what we've seen with economic activity is that government stepped up largely to help offset the damage that was done in the early days. But the recovery time may well be long and quite volatile. And I think that the importance of having a strong relationship from a fund manager or from a listed company with your stakeholders will be critical over the coming years. And there's the opportunity now that you have, as we've structurally adapted, is that you've now got the tools, particularly with what Forum 360 does, to better measure the strength of that relationship.
Yeah. So I just got a comment here from a financial advisor listening, which kind of goes to what you've been speaking about over the past little while. As a financial advisor, I've experienced a very high level of contact from various fund managers, in fact, at times too much, and also in all forms, Zoom presentations, videos, newsletters, etc. It's been very impressive. Obviously, there's more activity all around. I've just undertaken investment briefings for clients with a leading economist, which has had an excellent response from attendees. So obviously, the appetite is there to hear directly from money managers. And I guess it comes down to how best to do that. Just one final question, Rolly. Given all of what we discussed, if you were running an IPO or a major sort of capital raising today, or launching a fund, what 3 things would you be looking to emphasise in your communication to investors?
Yeah, apart from showing your investors the ability to generate free cash in a low growth, high debt burden environment, it's the G in ESG, and I made that point of understanding your investor base and how they invest, and that has changed. Remember, ESG wasn't even a term before 2005, and so there's been significant change. And so you are accountable to not just your investors, but a broader. Your investors want to see from you information on more than just what you're delivering for them in terms of value. They want to see what you're doing across your other stakeholders. And then I come back to that point I make, Nick, about the importance of the relationship, and that leading management teams will make themselves accessible in over the years ahead. Not only that, they will capitalise on the measurement tools that are now available to them to better measure how well they're engaging with stakeholders, and that to me is critical in terms of defining who does really well over the coming years versus which teams do not do so well.
Well, look, I think that's probably all we've got time for today, Rolly. Look, thanks for taking the time to join us. It's been really interesting. I've really enjoyed the insights, and I hope our audience has too. I'm sure they would have. To our audience, if you've got any questions about anything that has been discussed, or would like to have a chat about your own investor engagement, then feel free to get in touch. Otherwise, we'll see you next time around. Thanks again, Rowland.
Thank you, Nick, and thank you everyone for joining me. I appreciate your time.
Thanks.